All right, welcome back to the 7-Day Crypto Profits Accelerator. Here we are, day 5, your first liquidity position. This is where it starts to get fun. We have gone through the basics of what we're doing, why it works, what the mechanism is for creating this trading fee income for you. And we funded your first wallet, and then we talked about, hey, big picture, here's the strategy that we're going to employ. Now, today, your first liquidity position, remember we talked about principles, strategies, tactics, tools, okay? I'm going to show you one tactic that uses a couple of different tools in order to create one liquidity position, okay? By no means should you take this as like, oh, I learned everything I need to know now. No, I'm just trying to give you your first steps, okay? If you've never done this before and you go, I just don't know where to start, there's so much in DeFi. Yeah, that's what this is about. I'm going to give you one very clear path. This is not meant to cover absolutely everything, but it gives you a clear direction. And the best part, you get to see firsthand how well this actually works. Because that's the main question, right? It's not like, oh, can this work? You've seen it work for other people, but you're thinking, well, yeah, but can it work for me? Can I actually do the thing that allows me to make those kinds of gains in crypto, in the world of decentralized finance? So when we funded our wallet, we used the example of MetaMask, and we sent some assets there. It was in the form of ETH, okay, Ethereum on the Arbitrum network. Okay, don't worry too much about what that means if you don't know the difference between the various networks right now. It's just that the asset ETH can exist on multiple different blockchains. Okay, that's all that means. Now, in MetaMask, if I open this up, in my little demo wallet here, looks like I've got $475 worth of ETH, okay? I'm just going to open up a very small position. Again, the point is just to go through click by click how this works, and then later down the road, we're going to evaluate what the actual APR is that will be expressed as a percentage. And that's what's important. It's not about like, oh, I put in $100 and I only got $1 back. It's, well, yeah, but the percentage multiplied out over the course of the whole year would equal X. And if you actually put in a significant amount of investment capital over the course of time, that would yield X return based on whatever percentage APR that you're getting. So today, I'm going to be using a tool. It is called Aperture. Okay, again, one tool, one of the tools. There are many of these. There are what they call DEXs, decentralized exchange platforms, and there are liquidity management tools. This happens to be a liquidity management tool that leverages the Uniswap DEX. Uniswap is a decentralized exchange platform, okay? So I'm at aperture.finance. I'm going to click on Launch App, and I'm going to come in here. I'll zoom in a little bit so we can see. And the first thing I'm going to do, let me disconnect this wallet here first. It will ask you up here in the upper right-hand corner, connect wallet. So I click there. I get to select, I want to use the Uniswap DEX, I want to be on the Arbitrum network, and I want to use my MetaMask wallet. So I click all three of those, and then it walks me through, okay, which one you want to connect? I'll click next and connect, and now here I am. Now up here it shows the ending of my wallet address that is connected to this liquidity management platform, okay? Now, for the sake of this demo, I'm just going to be setting up what I think is one of the simplest, most basic pairs to set up. And it's a pair that historically has had a very large trading volume. Okay, so the trading fee income that you are going to generate by being a liquidity provider, it is based on trading volume. So whether the chart goes up or down or sideways, there are trades happening that force that chart all over the place. And every single trade has a transaction fee associated with it. You earn this one part of the earning puzzle, right? You earn based on trading volume. So I'm going to put together a pair of ETH on the Arbitrum network and USDC, a stablecoin, on the Arbitrum network, okay? Now, in order for me to make a pair, I need to have both of those assets in my wallet. So I'm going to come over here to the swap feature. You can see up there, swap. And it says, all right, select a token. Well, I'm going to trade some of my ETH, and I want some USDC. I'll enter that in there, USDC. And for now, I'm going to say I just want about $50 worth of USDC. So I can click on swap. If it's the first time you've done this, you might have to like approve an asset. That's another step. It'll say like approve ETH, approve USDC. You go through that as well, but then once you've done that once, you don't have to do that again, and it'll just have a little confirmation over here. Okay, your swap token request has been sent and my transaction succeeded. Fantastic. Now I have in my wallet both ETH and USDC. Now I am able to create a concentrated liquidity position by taking those two assets and pairing them together. And obviously when we're talking about ETH and USDC, the reason these are such highly traded assets is because they're very widely known, they're very popular, and they're involved in much more in the whole infrastructure of the decentralized finance ecosystem, meaning a lot of people want them for a lot of reasons, and they're very heavily traded on like day trading and leverage and that sort of thing. So we know that there's a lot of trade volume around these two assets, and we're just saying, hey, I want to capture a piece of that. So I'm going to click over here on liquidity positions, and I see this nice big purple button that says new position. And right here, I'm going to select USDC and ETH. Okay. Now I have to select what's called a fee tier. All right. There are lots of different options depending on the type of pair that you're into, but for something like ETH and a USDC with a stablecoin pair, typically 0.05% is probably the fee tier that you're going to land on. Most of the time, though, most pairs will be around the 0.3% fee tier. It's basically just a way to acknowledge that there are various slippage tolerances depending on which assets are being traded that allow for more or less fees to be charged on each transaction. Don't worry about it too much for now. Again, we're just going by like the basics, click by click, go through the motions so that you know you can set it up so that you can see the results. So we'll go 0.05% fee tier. And you'll notice that my range here is expressed right now as ETH per USDC. Well, for my brain, I want to toggle this over so it's expressed as USDC per ETH, and that makes it a little more palatable for me because I go, hey, I can understand that the current market price for ETH is 3,054, therefore I can set my range accordingly. Now, what we're talking about with range is when the asset trades within the range you set, you earn trading fee income. When it moves outside of the range that you set, you do not earn trading fee income, okay? You could take a super tight range and earn more fees, but then you fall out of range immediately and you stop earning fees. Or we could go more conservative and say, I'm just going to set a reasonable range. It usually defaults to 10 and 10. I'm going to set a reasonable range, earn pretty good fees, and I should be good to go. Now, I'm not saying that a 10 and 10% variance on either side is always the thing that you'd select, okay? There is more to it. There's a little bit of a research process that goes into this beforehand. You got to take a look at the chart and kind of see what's going on, as well as anticipating where that chart may or may not move in the next month or so. But again, for the sake of this demo, I'm just going to do the simplest version of this. And I would encourage you, if you're doing this for the first time and you're just dropping in, you know, a couple $100, maybe just you want to see it working for you, that's totally fine. Do 10% on either side and call it good, okay? You might fall out of range. It's okay. It's not a big deal. But this healthy range will kind of give you just like a nice baseline so you can see the process in effect. You can watch it working. Now, it wants me to input token amount. That's over here. I'm going to click on max on my $50 of USDC, and it says, okay, you're going to have $50 of USDC and about $46.81 worth of ETH. When you first create a pair, if your range is equidistant from the current market price, you will have approximately a 50-50 split. You'll notice this is not exactly 50-50 split, but it's pretty close, okay? And for the sake of this demo, that's what we're after, is a nice clean, hey, a little bit of each one in about equal proportions according to their current dollar value on the market today. Then down here it says approved USDC. If you've never done this before, again, you'll have this button that says approve USDC. You can click that. It'll have, MetaMask will pop up, have you go through approve, great. Now you're set. Then it will say open position. I go, all right, I'm going to click there, open position. It's going to show me the preview here, my net deposit, $96, and I can confirm open position. Confirm. and it's been successfully created. There it is. Sometimes it won't appear right away. If it doesn't, all you have to do is refresh your browser screen, okay, and then it will appear. Now, when I'm looking at this, I can click on any part of this rectangle, and granted, this is inside of the Aperture platform that I'm using right now, liquidity management platform. I can click here, and this shows me a few other stats, all right? My liquidity, that's the value of the base assets that I paired together. I can add liquidity, remove liquidity. And then unclaimed fees. Obviously, this is 0 right now, but when I come back a day, 2 days, 3 days, 7 days later, this will have accrued fees based on whatever daily percentage return is active at that moment. So when we talk about APR, for the whole year, we go, okay, 50 to 100% APR is typically a healthy potential here, depending on the assets and the pairs that you're choosing. And that's projected forward for the entire year. Now, the daily APR will obviously be much less than that. So if you average around 0.27% a day, that will be on track for a 100% APR. But in reality, you don't get exactly 0.27% every single day predictably, because it's based on trading volume and it's a market. So sometimes the market has wild, crazy, awesome trading volume. Sometimes there's some quieter days. So you might get 1% on one day and you go, what? 1% a day? This is madness. 365% a year. This is crazy. But then the next day you get like 0.15%. And then the next day you get 0.36%. And the next day you get 0.24%. Or whatever the numbers are. I'm just acknowledging that the daily yield goes all over the place, up and down and up and down and up and down. You can expect that. It's normal. Like, that's just how this whole process works. But we're going to check back on this position after a few days, and I'm going to show you what the actual APR is. So we always have a projected APR, and then we have an actual APR, okay? So I opened up this position just to show you, hey, even with a blue chip asset like ETH paired with a stable coin, we can still get some really nice APR. It is dependent on trading volume. So that's why you'll hear me talk about this massive range, right? 50 to 100% APR. Well, which is it, Brandon? That's a massive range. I agree with you. It's a very massive range. But I can never tell you, oh, you're guaranteed X or it'll be exactly whatever percentage, because of the volatility of the volume that comes through in these markets, okay? Now, what I can tell you that for me is super encouraging, crypto markets are open 24/7. They don't close on a Friday and reopen on a Monday, meaning 24/7 there's an opportunity worldwide for these trades to occur. So online every day there's all these millions and millions of swaps happening. This process that I just showed you is what puts you in a position to be the liquidity provider that you can now earn trading fee income. And when you earn, it's going to show up here. The coolest thing about this is that you will get immediate feedback. You could come back in 24 hours and go, hey, there are my fees. And you could like do a quick little calculation and go, wow, that represents 0.3% or whatever the math is. You could come back in 1 hour. And with $100 deposit, you know, if I come back in 1 hour, this will be a few pennies because it's going to accumulate gradually over time. But the point is, you get immediate feedback and confirmation that the process that you're leveraging is working. And to me anyway, that's what makes this so cool. You don't have to wait a year to go, oh, now I have confirmation it works. You get confirmation right away. Okay, so that's it. I didn't want to make this video too long. Today is just really short and sweet. Click, 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 click. This is how you set up your liquidity position. So, I mean, I guess if you wanted to, if you're watching this after I published day 6 and 7, you could go right into crypto mindset. All right, you don't have to wait an entire day in between every single session. It's just set up to be like, hey, reasonably, if you did one of these a day for 7 days, you're gonna be much, much better off than most people who are dabbling in the crypto markets, because most people who are dabbling in the crypto markets don't really know how to get started. They don't know how to stay safe. They don't know how to set up their wallet for security, and they're either falling for scams or they're making irresponsible trades and they're losing money on them. This is your pathway to getting set up in what I believe to be the most secure way in the world of decentralized finance. And now you have an actual tactic and tool in your tool belt that you can use. Here it is, using Aperture, using MetaMask in order to become a liquidity provider. All right, that's it for today. As always, if you have any questions, drop those questions into the Facebook group, and we'll give you some support along the way. And yeah, ultimately, if you like what you're seeing, you like the results that you're getting from this process, and you want to go deeper, and you want one-on-one mentorship and guidance and support, and you want a community of other like-minded investors who are doing this process, as well as many other tactics that feed into our overall strategy, that would be the mastermind community. Okay, so there's an opportunity to join right now to apply for lifetime access to the mastermind community, where you get to experience all those benefits and go through this process with other people and learn about so much more beyond, hey, ETH and a stablecoin is great, you can make money there, but there's much, much more. It's this vast world, and that's why I didn't put a time limit on the membership duration, because I know for most people, it takes initially 3 to 6 months to kind of like go through the entire learning curve and really feel 100% dialed in all of this. And then there's even some more advanced and nuanced things that you're going to learn over the first couple of years that you're in this world. So if you are interested in that, again, just post in the Facebook group, tag me. You can reach out to me on Facebook, whatever the case. Let me know that you're interested in filling out that application, and then you can book a call to talk with either myself or someone on my team, and we'll kind of guide you through the process, what that would look like for you over the course of the next 3 to 6 months to be in the community and kind of take things deeper to the next level. All right, have a great day, and I'll see you next time.